October, so hope you all had a good evening. Just getting the briefing underway, and yesterday was a relatively quiet session. The calendar certainly starts to liven up a bit more today, and this leads us then into what is, I guess, a little bit more heavy in the second half of the week for major US economic data. But just having a look this morning, the DAX back in to trade given the lack of action, given the Unity Day holiday in Germany yesterday. So just explaining then the slight gap up that we've had in the futures. And we sit here still in marginally positive territory. This came after yet another record high close in regards to the S&P, edging up to finish in the cash up 0.2%. Nasdaq up a similar margin. The Dow, if anything, a slight outperformance up 0.4%. Walmart was a particularly good gainer yesterday. You had the car maker data coming out for North American sales, and they were particularly strong. However, one of the caveats here was to do with the fact that people were replacing their cars because of the adverse weather conditions that had occurred. Obviously, we've had Hurricane Irma, Hurricane Harvey in that particular period that was surveyed. So positive finish on Wall Street, fairly quiet overnight, nothing real major happening in Asia Pac economic data, and then China still out for the Golden Week holiday, so really taking the baton on from the way the US closed, and so marginally positive. There is a bit of a discrepancy though because of that holiday between the DAX being up. The Eurostoxx actually is just having a bit of a retest down at around the lows from yesterday in the futures. Eurostoxx incredibly quiet yesterday really overall. You can see here we're just having a little push here in the futures beneath the midday low that we printed yesterday's session. Fairly significant level you can see here in the last week in regards to the high print from Monday, and then yesterday's support point before the bounce back up to its respective R1 yesterday. So if we breach this, potential for a little run down to possibly that S1 if we continue that move, and then next level of significance would be looking at the Monday low down at 35.77 if that were to occur. So that's probably more of a true reflection of the current sentiment, just given that the DAX is a bit more of a catch-up play at this particular juncture. Looking elsewhere, fixed income then is higher. Bunds up fairly significantly actually this morning. We're up about 43 ticks. You can see we've had a pretty good lift really since the about midday yesterday. And we're going to talk about a little bit of some of the talk around the Fed chair, who the replacement of Janet Yellen could possibly be, and how that might influence then the Fed's decision making and whether or not they're becoming more dovish and hawkish. You then also got as well underlying this the whole political situations developing in the likes of Spain, still in Germany, Austria. The legislation elections that we spoke about yesterday is still upcoming in the next 2 weeks or so. So bunds already through the high that was seen, the weekly high on Monday. You can see how that's found on the initial break at the opening of trade very early in the Eurex open this morning. We broke that, came back to the level before then moving up to R2 is where we are at the moment. I guess slightly longer time frame, if we were looking at a broader perspective of upside levels of significance, then really the 162 handle was a pretty big barrier on the upside psychologically, and then also the high that was seen at the end of September around the 25th before the eventual pullback. So again, worth keeping an eye on the Bund. It has seen some decent movement of late. Okay, let's have a look at some of the news then that's come out. Not a great deal for me to cover, mainly going to focus on this as an issue. And this being Trump aides deliver their shortlists of Fed candidates. We spoke about this a couple of times. This is what we're dealing with here is Janet Yellen's fixed term as Fed chair is due to come to a conclusion in February of 2018, so only a couple of months away. So it's already now that they start discussing who the potential replacement could be, or in fact, would Yellen get reappointed? And so this is what the articles this morning are really focusing on. This is because Donald Trump advisors have given him a final list of people that they're recommending as candidates to lead the Federal Reserve, and have ended the search according to 7 people familiar with the matter. 2 people have said that these are anonymous sources that Fed Chair Janet Yellen remains under consideration, even though a few, if any, of Trump's inner circle are advocating for her reappointment. So one thing that I wanted to show you was this. If I refresh it, you can see all the little heads start bouncing around. So this was what it looked like in June, who was favourite. This was July. You can see Gary Cohn, way favourite then. And then a huge pullback from Gary Cohn's 75 kind of probability out of 100 becoming Fed chair, all the way back down to kind of 3rd in the pecking order now. If you remember, he came under some pressure about his criticism about how Trump handled the Charlottesville situation, some of the comments that the president made at the time. He kept his job. There was some rumours about him threatening to resign. So consequently, he's kind of fallen out of favour, if you like, of probably what the administration would want to choose. So Janet Yellen is still, by this measure, on Bloomberg's kind of ranking table. I'll drop this link into the chat room later to see how they've calculated their methodology here. But Yellen is still actually the favourite by their measure. You've then got Kevin Walsh, who is the chap that we looked at that caused a hawkish reaction in the markets last week, where the dollar spiked, as did US yields, and equities came under some very short-term selling pressure. This was because President Trump was said to have had some closed-door conversations with Walsh about potentially him taking on the Fed chair position, and he is deemed to be more leaning on the hawkish side. Other ones, as we're scaling down, get kind of progressively less important, but there was some interesting comments here from Politico, which Deutsche Bank have been commenting on this morning. They've said Politico, which is a kind of the main political news website in the States, and it gets followed quite closely by the market. Their sources have reported that those close to the Fed chair selection process are confirming Walsh and Powell as the front runners. So if we go back here, this is Walsh, the chap here in second, but also Jerome Powell, which is the gentleman down here who's in what, 6th, 7th spot. Politico article suggested that a decision could be made in 2 to 3 weeks, so it might not be long before we know how this is going to play out. And actually, this is very important for the prospects, not for December, but for 2018, because at this point we are commencing quantitative tightening. We know that an interest rate hike, more likely or not, is going to happen in December. The question mark is what happens thereafter, particularly if Janet Yellen, who's kind of steered the ship now for several years, if she leaves, she gets replaced by a hawk. Does that interest rate trajectory pick up and become steeper, or does it become flatter and we have a more accommodative and more slower, gradual approach to raising rates going forward, now that we're in this rate hiking cycle? So this will definitely have an implication for investors when this comes out, or more details pertaining to who this is going to be. Now, the interesting thing about Jerome Powell, who's this guy here, because Politico have said it's Walsh and Powell that are the favourites. Now, Walsh, we know, has been deemed to be erring more on the hawkish side. He was also incredibly critical of the Fed during the financial crisis, so it might appease kind of the more Republican side in regards to the Trump setup. But Jerome Powell, on the other side, is a current Fed governor, also Republican, and someone who's learned monetary policy trade well during his 5-year term on the board so far. Deutsche Bank, though, from their analysis, have suggested that if Powell was to lead the Fed, that would not be a large step away from a Yellen Fed or Yellen-led Fed, and would thus represent continuity for the markets. So if it was going to be a 2-horse race between Kevin Walsh and Jerome Powell, you can define this as Walsh would be a bit of a shake-up in tactics, would probably require a degree of financial market or assets repricing to take into account his differing view of financial markets and monetary policy, whereas Jerome Powell would be pretty much just continuing to just take, as I said, the baton from Yellen and continue on the pace and path that she has already defined going forward. One tweet that I did see was this one this morning, and this is a fairly notorious investor based in the US, Jeff Gundlach, and he has overnight story suggesting that Neel Kashkari has shot up now to favourite or second favourite after he was mentioned an endorsement by this influential investor. Now, don't get me wrong, if just because one, let's say, fund manager says that I think this guy would be good or I think he has a chance, that definitely doesn't mean that he has inside information with what the Fed selection process at the administration is probably thinking. But this would be probably one of the most market moving if Neel Kashkari became Fed chair. Why? Because of the dot plots. You remember when we looked at the dot plot matrix? If you look out to, say, 2018, there's a real clear cross-section of outlying hawks, those that see interest rates up at nearly 3% by the end of 2018. And then there's the most dovish, actually probably likely Kashkari, who actually sees absolutely no interest rate change from right now today all the way up until the end of 2018. So rates to stay at their current level. And so him being an outlying dovish person, if he was to become the Fed chair, then probably what you would imagine is that equities, all-time record highs, are going to continue, because any rate and speed of normalization is going to be incredibly slow if it was under his leadership, you would feel. So definitely the one thing I think that's happening at the moment, you can see between reports here, what some investors are saying, from here what Bloomberg's ranking and their survey methodology is saying, to what Politico sources are suggesting. No one seems to know at this point. I don't think even Trump probably knows who he's going to pick. But the timings make sense and the timings are important, and this is something which potentially will move the market if either Walsh, Kashkari, one of these more outlying members with a differing view and approach to Janet Yellen were to get into place. So definitely a story to keep an eye on in the next couple of weeks. Okay, quick look at oil prices, because we had, of course, the API crude oil inventory data last night, and this comes ahead of the Department of Energy's release that we'll get a bit later on today. Let me just highlight this section here. Was the release of when it came out last night. You can see we broke the low after the sell-off that was seen on Monday. After we technically broke this kind of double bottom, was the catalyst, followed by the OPEC information that they've increased supply, Saudi Arabia and some of the other instrumental or influential producers within OPEC dropping compliance levels, so prices came off. The data came out last night, and then we did break that. However, the move failed to sustain. That previous support was a degree of resistance overnight in the Asia-Pac session until early Europe stepped in, and we've just come back up towards pivot here. Looking at the numbers, and this will explain why the market saw initially a bearish reaction, but might also explain why it's been counterbalanced so far this morning. And that's because the crude headline was a drawdown of about 4 million. Expectations were for a draw of just 500,000. So actually the drawdown on the headline, if you're looking at that specifically, is bullish. But the first reaction, the reason why we dipped originally overnight, was because Cushing at 2 million is actually the biggest build we've had in several months, the biggest build since March. And in gasoline, a build of 4.2 million is the biggest build since January, much bigger than expected build of 1 million. So on the balance, you would say these two numbers being statistically relevant, such large builds that haven't been seen for several months, outweighed the crude, but net it is slightly mixed. It's not completely bearish because of the drawdown in the headline crude reading. So just looking where we trade at the moment, we've pretty much come up to around the pre-announced levels. We were trading bang on pivot essentially, 50.35 when the APIs came out. So Possibility we could just stay within this defined range now, 50.07 to the 50.35, just awaiting the data to come out later from the Department of Energy, I would suggest. Okay, looking at the calendar, there are certainly a couple of things you do need to be aware of that are coming out today, and first and foremost we get the kind of main PMI release from the UK that we look out for on a monthly basis, that being the service number. Now, if you remember yesterday, we had the construction PMI from the UK, and that showed a contractionary reading, i.e. sub 50, for the first time in 13 months. And that did promote some fast money selling in the sterling currency yesterday, so it's downside pressure in cable. But service and services is really the key one for the real underlying kind of engine that drives our economy here in the UK. So this number is going to be particularly important at 9:30. Expectations are for 53.2, which should actually be no different from previous. Let's just have a look at what this looks like on a 12-month perspective. You can see that really the data's been within a range of 53 to 54 for the previous 4 consecutive months. You can see prior to that in really, I guess, Q1, early part of Q2, we were up elevated towards 56, same case at the end of 2016, but we haven't been that firm, and if anything, there's been a subtle deterioration in the data as we've gone forward. So I guess a downside surprise would be you'd have to get below, on this 12-month reading, I'd say kind of 52.5 or below. That would be almost a 1-point miss, and also put us at the lowest levels we've been in well over a year. On the upside surprise, then probably something more akin to 54 to 55 plus would probably be needed. But one would imagine that if we're looking at the service sector, it's a measurement of the month of September, now that the August summer season has passed, and with, as we know, consumers feeling the pinch from the tightening inflationary conditions, I would say probably on the balance the risk is to a downside surprise. And if that materializes, then looking at cable is a little bit susceptible at the moment to downside movement, which we have seen occur over the last few days. Theresa May's inability to kind of answer the question is Boris Johnson sackable certainly has brought her back into the spotlight. The Tory conference has been ongoing, hasn't exactly set the world on fire, apart from Boris Johnson. As much as you might think he's a bit crazy, at least he has some degree of charisma, unlike most of the other Conservative politicians. I don't want to make it too political, but keeping an eye on cable here, if we were to move lower than the weekly low that was printed yesterday afternoon, would probably be definitely within sight and target if we were to get a weaker number for the service reading. So 50 or 132.50, we're trading at pivot at the moment. If that breaks, S1 downside 32.40, looking slightly longer time frame, you can see really there's a key level of support here in cable where we're at the moment. This was the mid-September resistance level, which is now kind of added support to the price action since this move lower we've had since this week has commenced. This obviously being a bit of a byproduct of some ongoing dollar strength, but also some weakening in sentiment around the Brexit situation as well. A break of that level, if the data was worse than expected, certainly can open up, you would imagine, a bit of a further run to the downside. I'd be definitely targeting in that scenario the 132 handle, that being the low that was seen on the 11th, and also the spike low on the 14th, which is the volatility around the Bank of England's initial vote split. If you remember, there was an outside chance of a 6-3 hawkish outcome. That didn't happen. You had a bit of an unwind on a 7-2 print. We blipped lower only to rally on the hawkish minutes that accompanied that vote split and count. And then obviously the hawkish comments out of Flager, and we've taken all of that move back to where we are today. So quite a critical level here in cable. A break of that, certainly I don't discount a 132 test even on the intraday today, if that number was negative enough. Okay, a few other important data points to also be aware of then. Going back to the calendar, going to skip over Eurozone retail sales. Very rarely have I seen that really have much of a market impact. So going into the afternoon, we then get the run into non-farm payrolls, which would be, of course, on Friday. So we get the private payroll number, ADP, National Employment for September at 1:15 this afternoon. Now, as you can see here, we're looking, and median expectations are for a fairly significant drop-off to 130,000 from the previous 237,000. So if I bring up ADP here, if we were going to go from the median consensus, 130, this would put us down around here. That would be the worst reading since going back to October of 2016 when we printed 62,000. Now, one thing to keep in mind here is that the markets are probably unlikely to be too phased by that significant drop-off in the number of jobs created. Why? Because this particular month obviously is a reflection of the adverse weather conditions that affected large parts of North America, and hence people's ability then to capture employment or to gain employment. So really it depends of how bad this is, might then shape the expectations further for what non-farm payrolls is going to come out as a headline reading on Friday. In terms of non-farm payrolls, I did actually see that the median consensus for non-farm payrolls tomorrow, or on Friday, excuse me, is 90,000. But actually the range for non-farm payrolls headline on Friday is minus 45,000 to plus 209,000. Now, the minus 45,000 actually doesn't sound that out of the realm of possibility to me, because back in September of 2005, when you had the first reading of that SEP report following Hurricane Katrina, the headline change in non-farm payrolls was minus 35,000. And that was after the 3 months prior to that reading, there was a 3-month average of 174,000, which isn't that dissimilar from what we have at this present point in time. So because of Katrina, we had a headline change of a negative reading. And so for someone to be thinking of a similar type situation, I can understand why, but I don't think the hurricane was quite at that level. So it'd be interesting to see whether or not it translates into a negative print. But I wouldn't be caught massively by surprise if that was the case. I don't know who it is, but the firm that's going for plus 209,000, I'm not sure how they've calculated that figure. I'd say that's very on the high side, considering what has occurred over the particular surveyed month. But the consensus estimate will be 90k. So again, ADP will be important. As ever with ADP, and I will remind you closer to the time, don't forget that there's the actual released, which comes out the nanosecond that we hit the 1:15 time frame. But the revision can take anything from 1 to 5 seconds before it's released. What often happens then is 2 phases of the reaction, the initial knee-jerk move, to be followed then and accompanied by a secondary move, which can often be the complete opposite, depending on whether the revision is positive or negative. So with ADP, I would suggest you're better served to wait before both numbers are known before looking to enter the market if you were looking to trade around the data. Other than that, you've got the ISM non-manufacturing PMI, so again the employment constituent will be of interest, and then you've got the crude oil inventories as discussed later on, regular time 3:30. Speakers, there's a couple here that I want to just update you on, because Theresa May, just to update you on the time, I've been told it's 11:30 AM that Theresa May will give the closing speech at the Conservative Party conference in Manchester. At the same time, 11:30, Vice Chair and the chap who has already resigned, soon to be leaving, but nonetheless given his seniority within the existing FOMC framework, Stanley Fischer, is speaking on Bloomberg in an interview live at 11:30 AM as well. So Stanley Fischer, Theresa May, both to kick off at the same time. Keep an eye on that, 11:30. You've also got ECB's Mario Draghi speaking at 5:15 this evening, so after the European cash equity close, However, this is him giving opening remarks at the inauguration of the ECB's visitor centre. So typically I wouldn't be expecting him to say too much. And also with the euro-dollar currency pair having gone from in excess of 121 to 118, there's probably not so much of an emphasis for him to have to talk in order to kind of counteract a strengthening euro, because the stronger dollar that we've seen over the last week or two has really done that job for him. So I'm not really expecting anything from Draghi at that point. And then Fed Chair Janet Yellen is also talking at a community banking conference much later on this evening, 8:15 p.m. Okay, so just to quickly wrap things up, you have had some service PMI data from Eurozone already coming out. So this front runs the UK number, of course, we'll be looking out for at 9:30. So the French number, just to get up to speed, came in at 55.6, which was in line with expectations. And we've just had the German figure come out, the German service PMI, 55.6. So it looks like that was in line as well. The French number, actually, just to correct myself, was 57, which is broadly in line. These are final readings, so hence the reason there's been minimal reaction in the market. Okay guys, coming up to 9 o'clock, I'm going to leave you with that. So have a good day. Any questions, of course, just let me know in the chat room. Otherwise, good luck, and I'll see you later on. Thank you.